Okay, into the three steps for technical analysis in Forex now. One, we have to determine the direction of the market. Two, we have to um, determine an area of interest. And then three, we have to determine the entry model, or at the end of the day, something like entry and exit strategy. Okay. So which means like in other words, entry confirmation. So entering the market is the important thing. So and then after you enter, then you will be thinking about whether you are holding on or you should exit, depending on what is happening. Yeah, into another day, it would come with the or risk appetite and like or patience level and um I mean depending on what is happening in the market or like some of the fundamental or news, what is really happening, and a bit say whether you should hold on to your analysis or not. But inside of the third one no, is also the ability for you to know when you are wrong and when the market is trying to just manipulate or test your analysis. So, and knowing that, okay, the cost in senior price ni ni senior didn't equate, I'm wrong. And then even if you are going to be wrong, then you can close the trade earlier. Sometimes even before it will hit your stop loss, or sometimes at your stop loss, you can just close it and not lose more. That's if you are able to understand or determine that it looks like from what is happening, you'll be wrong. And with more experience, you are able to determine that much better. Sometimes the trade will come and hit your stop loss, sweep everything before it goes back to the direction that you had already determined, and or it will activate the area of interest that you actually was looking for. So, into ne nyinaa no comes with more practice and experience and all that. There is no 100% strategy. Whichever strategy you'll be using, no, you can lose and you can also win. But the best thing is to um, leverage your wins. When you are winning, you should win good and take good profit or take some profit. And when you are going to be losing, or when you are losing, you should lose less, or you should cut your losses. So those are some of the few things that, but all those things comes with the more you trade, the more you understand, the more you study the price. So let's say, for example, we are looking. So the first point is determining the direction of the market. So to determine the direction of the market, let me go to the next slide. Direction. To understand the direction, we have to first understand the market structure. Or the market structure is simply how is price is moving on in terms of the candles that are being used to represent the price, or whether the line chart or something like that. So how price is moving in terms of the candles. Okay, so we will see that price does not move in a always in a straight line. The price is not just moving up, up, up. Okay, you will see say some of the candles will be pointing up, which is like I understand. I know you know what bullish candle is and what bearish candle is. So
Yeah,
bullish candle is the green candle,
the green candle
and
and the
then the
bearish
bearish
candle.
candle is the red, which you can yourself you can change the colors, and we can show you bit me actually on in the practical. So when we go to the chart, but let's just take it that the green candle is bullish. Bullish means that buys and bullish is mostly seen as price going up, 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 and bearish is price going down, down, down. Okay, so you can
Okay.
understand the direction of the market when you look at the market structure in terms of how the price is moving. Is the price moving up or is the price moving down? Okay, if the price is moving
Hmm.
up, it means the bulls are in control. If the price is moving down, it means the bearish or the bears are in control. Okay. Now,
Okay.
if the price is moving, like I said, it was not going to be moving on a straight line. Okay. The price will move
Hmm.
up and then it will drop. Okay. Then it will move up and it will drop. So you see that as a zigzag kind of thing.
Yeah.
Even though it is moving up, it is still dropping some way or to some point, then it will continue going up. And that is what we call the structure. So when you look at every market or every price of an asset, you would see three types of structures. You will see um, a bullish structure, bearish structure, and then you will see ranging or sideways structure. So sideways ranging consolidation. So for bullish structure, you are going to see that the market is giving us highs, low but high. Okay, you will see
Hmm.
highs. Then, as you are seeing a high or highs, you also see low but still highs. So, in other words, we can say it as higher highs, lower highs, or higher lows. Okay.
Hmm.
Uh-huh. Higher
Higher
highs,
lows, always.
yes. Uh-huh. Okay, let's continue. Um, so you will see higher highs, lower but highs, or low but highs. In the same thing applies when it's a bearish market. You will see lows or lower lows, and then higher but lows. Okay, higher lows or high lows.
Mhm.
So and then in the ranging market, you will see something like a high, then you will see the market comes down to make lows. Then in the next phase of or in the next section, you will see the market will make series of highs again. and then the market will make series of lows again, and it will make something like a ceiling. Like if you take a building, the top of the building, like ceiling,
Mhm.
and the floor. So it will go up and go and catch a particular level. Then it will
Mhm.
come down and touch a particular level to down. Then the price will go up again. When it gets to the level at the top, it will stop there. It will not go further than that. Then it will come
Mhm.
down again. So once it's doing that, at a certain point up, it stops. It comes down at the same point down when where it stopped previously. The price stops again, then goes up. Is what we can say or refer to as um ranging market or consolidation. So these are the three types. So first, we have learned from last week that you should always use the higher time frame. Okay,
Mhm. Mhm.
so the higher time frame that I will advise you to first check before you start thinking about the market. If for nothing at all, check the daily and the weekly time frame. Okay, or maybe you
Mhm.
might want to see the 4 hour, but let's go to like gold, okay, and then let's just go straight to the weekly time frame. So weekly time frame. And if we are not seeing what I'm explaining clearly, we will move to daily or 4 hour to see if we can have that clearly. Okay.
Okay.
So this is gold. Do you see? Can you see?
Yes, please.
Okay. And this is the weekly time frame. Okay. So
Mhm.
let me take this my bigger zone out. Let me take these lines off so that it will be clear for you to see. Okay, good. Mm. Okay, so this is the chart. What can you see about this?
Um, okay. So I'm seeing that to start from maybe the names given to most of the things maybe a little bit difficult for me, but because I don't know much, but I can explain it here. Well, looking out from the screen right now, no,
Mhm.
I could see with a bearish candle in the middle.
You mean this?
No, no, the last two behind the long body candle.
Like here,
No, behind it. No, the long candle, the long one, the long body, the one in the middle,
this one,
the other one.
this one.
Uh, so
Mhm.
I could see that that one um, it started taking over the for sale.
Okay.
Then
So
to a
so
point.
okay, so you are identifying a very important thing. Like you are saying you realize that from the weekly time frame,
Mhm,
there was the bearish or the bears, the sellers started taking over
mhm,
from this point.
mhm,
So from the top, which is the wick, so you see the abano, the shadow, the wick,
mhm, mhm,
to where the open of that candle to the body. So a candle has normally will have a wick, either a wick down, a wick up, and a body.
mhm,
Okay, so a candle has a low, a high, and a body. Those are
mhm,
the basic parts of the candle. Okay, the top or the high of the candle, the low of the candle, and the body, right? So
mhm.
sometimes there can be a candle that doesn't have any wick or
English,
line
yeah.
at the top and at the down, but it just has a body. It
Mhm,
means something, but that's not what we are learning now. And then the ones that has a wick at the top and no wick at the below it, and with a body too. So any way you see the candle, any form, any way it is being, it closes, it is being represented. There is a meaning
Mm-hmm.
to it, but we are not learning uh, candlesticks themselves right now. We want to understand the structure first. Okay, so but you are identifying a very important point here that you could see that from this point here, the sellers started taking control, and it looks like for 3 consecutive weeks, which is 1 week, second week, third week. Okay, these three red candles means 3 weeks.
Mm-hmm.
For 3 weeks, sellers were in control. They pushed the price all the way from top here. Let me use this line. So you see where the wick is, exactly where the wick is. So the sellers started taking over, and price started selling from this point. And it took 3 weeks. Okay, sellers were in
Mm-hmm.
charge for 3 weeks up to here, down here, where this red candle stopped.
Mm-hmm.
Okay, this is a green candle, but let's just use these three red candles for now on the weekly. And this is the weekly. Okay, so the weekly gave us all this movement from the top there to down here, this place for 3 weeks. Sellers were in charge. Okay, so
Mm-hmm.
so if you were using the weekly time frame to determine this movement, right? You might be getting close. Well, we all didn't know that price will still continue to sell up to down here after
Mm-hmm.
it made this three candle movement, this bearish movement. We didn't know
Mm-hmm.
that price will come all the way down to this point down here. I mean here. We didn't know
Okay.
that price will get here. But this three weekly candles movement would be able to tell you that there is a higher chance that price will continue selling down.
Mm-hmm. Mm-hmm.
Do you understand?
Yeah.
So you see the
I was about to
importance,
ask
you
a
see the
question about
importance
that.
of the weekly where higher time frame.
Yeah.
So once you understand that, okay, as sellers have come into the market real strong,
Mm-hmm.
then there is a higher chance that the sellers will continue to take charge for a little bit more before price maybe will start going up or something like that. So you
Mm.
will now start thinking about also joining to sell instead
Okay.
of buying the market from the weekly time frame perspective.
Okay.
If you are
So,
using 30 minutes, it might be different. You might be seeing something different. But like I said, the
mm,
higher the time frame, the more valid the idea you are getting will work.
mhm.
You get it.
So please, can I ask this
Uh-huh.
question? So let's see. Let's talk about the red candle, which is the bearish candle. Is it? It has a big body
Mm-hmm.
and a small wick. And to a little understanding that I know, and to confirm whatever you are saying right now, that anytime you see the bearish candle like that, meaning you should try and make up your mind that maybe you're about to enter into sell.
Mm-hmm.
Yeah. Uh-huh. But you see, after the body was formed, the body of this candle, this long candle that we are talking about,
Mm-hmm.
before the bullish took over with a small body and a long wick.
Mm-hmm.
Hmm. You just made mention of this candle that anytime you see it, you have to prepare maybe your mind that maybe it can still go for sale.
Mm-hmm.
But why is it that after the long body and the small wick, the sellers were trying to push down to continue with the trade,
Mm-hmm.
but later on realized that the buyers rather took over, the bullish rather took over with a big with a small candle, with a small body candle
Mm-hmm.
and the long wick. Why is it? Why is it so?
Oh, yes, so we will get into that, but what I want to what I want you to understand from what we are learning the structure right now.
Oh, okay. The
So the
structure. Oh, okay.
structure for market to be going down, okay, it
Mm-hmm.
must show you price action, the structure. It must create a bearish structure. So from the weekly time frame, we can say that the market started from here. Then it made a long move up to here.
Mm-hmm.
Okay. Now,
Mm-hmm.
I already told you the market does not move in a straight line. It cannot just keep going down, 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 like that.
Mm-hmm.
So low, it will make a high, but the high is going to be lower. What I say?
Mm-hmm.
So that is what it has done. Then the next movement, when the market stopped from here and started reversing back to the cells, when it took off, where did it get to? This is the last point of, let's say, even here, the last point of the, and then it has come up to make something like this here. Okay. So the question now is, if we are still expecting the market to keep going down or making bearish structure, maybe it might want to give us something like this.
Mm. Okay.
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 We
Yeah.
don't know because right now it has already happened. That's why
Mm-hmm.
we are seeing this and we can map it that it made a lower low, a lower high, and then another lower low, and then it has made a small lower high. So should we expect a new lower low? Yes, it can be possible because, and if that happens, then it means on the weekly time frame, the market has made a bearish structure. Low, lower high, lower low, lower high, another lower low. This is a bearish structure. Okay,
Mm.
so the market is going to be making either an upward or bullish structure or bearish structure at every time. And so
Mm-hmm.
the structure that it will be making, you have to, when you see it, it doesn't mean that you should be selling or join the sell. It
Mm-hmm.
gives you an idea of what might be happening. So that becomes the first step for you to start thinking, okay, then when you move to the other strategies or tools you'll be using to determine, because we have not reached the point where you have to click on sell or buy it. Entry point, no. I think here
Mm-hmm.
we want to determine the direction.
Mm-hmm.
And what are we using to determine the direction? We want to see, does this chart produces a lower low, lower high, lower low, lower high? If yes, then it is likely that this market wants to become a bearish market.
Mm-hmm.
So if it
Mm-hmm.
wants to become a bearish market, what should you do? Then you should think of also
Mm-hmm.
selling.
Okay.
And you have to think of selling until the market now tells you, no, I want to now become a bullish market. Then you also tune your mind and you start. The trend is your friend. It is the trend or the direction that the market is going that you should make your friend. You shouldn't go against the trend.
Okay.
You understand the point? Yes.
Yeah, I
So
understand.
so that's one piece of it. So now, even from the weekly time frame, we can see that this market has made for us lower low, lower high, lower low, lower high. So right now that the market has come here, should we expect a new lower low? That's the question.
Mm-hmm.
That's the question right now. Is it going to give us a new lower low or not?
It's not going to give us in an accurate form because um it seems like it has become there's a resistance in between here, in between the bullish and the what do you call and the bearish
Mhm. Yes,
because of
we'll
the
get
lower
to. resistance, or we'll get to areas
Okay.
that we should be interested in. That's the second thing on on our list, like an
Oh,
area
okay.
of determine an area of interest. So an area of interest can be where we find that sellers or market participants will be interested in. Maybe there
Mm,
is a resistance or support or something like that there, and therefore the market might not be able to go past that point or something like that. Okay, but at
mm,
this point, we are just using the direction. So I would say that if the direction is telling us that it is making berry structures, then I would say that, okay, the market will continue to give us berry structure.
Barisk.
Yes,
Mm,
from that point, that's the evidence we see until something else
mm.
changes. Okay, but this is just this place. If we take the market from this point, if we take the price from this point, what can you say about the gold chart?
The good chart.
What can
Because
you
I
say
saw
about
say
what you see if we take it from down here, this point to the top?
it seems the bullish was in control.
Yes. So before this berry structure started forming, the bulls were already in charge.
Yeah, I think they took over for a longer
Good.
period.
So what we have to now do is that we should not only think that the market is going to be selling, 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 selling. It was already making bullish structures. Then it is now trying to make bearish structures. So there are two things you should think about. Though this is showing bearish structures now, is it going to hold? Because already there was bullish structure. There was a bullish market. Okay, and what was that bullish market? So already we were seeing, let me start from here. Higher high, and low. So you are only looking for, you don't forget about the candles. You're only looking
Mm.
for where did it stop before it started selling or started
It started
making
selling.
two or three
Mm.
candles down. So it bought
Okay.
from this point up to here. Then it made one, two, three. This is a green candle, but it gave us a low or a weak point. And the week you from the on the weekly time frame, we should be using the wicks. Okay, the wicks will be
Hmm.
very important because a wick on a weekly time frame can become a candle body on 4 hour or 1 hour. Okay, or even daily. Yeah, because it takes 7 daily candles to make 1 week. 1 week.
Okay.
Yes. So we got a run from this point up to here. Then we
So
got,
you say it take 7 days to
yes,
make.
7 days candles back with 7 on the daily time frame is what makes up 1 week candle. So you see, this is 1 week time frame.
Okay.
Each candle you
Okay.
see here, whether it is small or big, represent daily candles are 7.
Mm.
You see that thing. So
Okay.
if
Okay.
you are fortunate to get one weekly candle going your way, it means for the whole of like 7 days, you'll be in profit, sir. Do you
Mm.
understand the point?
Yeah, I understand.
If you take the trade and a whole weekly candle goes your favor, like for example, let's say you took a sell here, and this whole
Mhm.
week, this candle came down and closed here. It means for 7 days, your trade has been in profit, sir, from Sunday to Friday, from Monday to Friday, Sunday to Friday. You get the point?
Yes, please.
Yeah. So if you start thinking in the higher time frame, it will help you to understand the market better.
Mm.
Uh-huh. So let's say, okay, so price gave us this high, then it came down to give us this low. Then it moved all the way up. Then it gave us this point. Are you watching?
Yeah.
It gave us this point. Then there's one weekly candle that brought the price down to, let's say, this point. Okay.
Mhm.
Because this came down. You know, this one price came down, but it is too small. Okay, well, at this point here where this red candle came in here, it is red, all right, but price had not taken the previous high out. Are you getting my point?
Yeah.
This was the previous high, a low, it gave us this high, then it gave us this low, then it has given us this high. So the high that is made, which takes out a previous high, is the one that we have to be looking at. So it gave us this high. Then after doing that, it drops down and gave us a low. After
Mhm.
giving this low here, then it moves all the way up again and gave us here. Okay, so this from this low, the run also took out this previous high, right?
Okay.
Up to here. Then
Okay.
after taking the previous high, it came all the way down and stopped here. It touched here before going up again to close. And then when it went up, so from this point, as price was going up, where do you think it should have gotten to in a bullish market? It should
In the
have
bullish
made
market, yeah.
a new higher high,
Yeah.
but it didn't, and it stopped here.
Yeah.
So the moment price stopped here and this came down and closed here, made here, and then the next candle, it closed here, the next candle opened and couldn't go up. At this point, people will start, though it is a bullish, it's still a bullish market, people will start thinking, what is this market trying to do? So, okay, so people will start thinking, does it mean, why is it that the market is not going up to make a new higher high? So then people will start thinking about selling.
Mhm.
Do you
Mhm.
get a point?
Yeah.
So let me take the lines out and see. So this is a bullish market. Why? Because we are seeing higher high, lower high, higher high, lower high,
So hard.
higher high, lower high. This from here, this should have given us a new higher high, but it didn't. And then it came down here up to this point. From this point, people will start thinking if the market couldn't give us a higher high, then there's a higher likelihood it will want to drop more. And that is why those who were able to guess or pick this an idea right from somewhere here and they sold the market, the next week they will be in profit up to down here.
Mm.
Are you getting the point?
Getting it. I'm
So
getting it.
this is
I'm
simple.
getting it.
Using the direction.
Using the direction and two,
Yes, it
using
doesn't
the
mean that
weekly
this
and
will
is
give
giving
you
me
an
understanding.
accurate entry or it will give you a successful trade, but just
Yeah.
the direction is helping you to
Hmm.
predict well.
So with the look of things, I would say
Okay,
that
so because it
the
couldn't give us
Mhm.
a new higher high, we are able to determine or think that then the market will want to drop for some time. And it was
Mhm.
right.
Mhm.
You see that? It's all right because
Yeah.
it's been dropping for some time now. And then as it is dropping for some time, it's how do we know that it will continue dropping for some time? So, yes, we are bullish, but it is trying to drop or pull back for some time. How do we know it will continue to do that? Okay, so
Mhm.
from this point, it gave us this low. Then it came up, gave us here. Then it came down again and gave us here. Then it has come up and given us here. Is it going to come down here?
Mhm. So why are you using red the red wig and the green wig,
Why am I using what?
the red, which is the bullish and the bearish,
Why am I using what?
the bullish and the bearish, because What's it? What's your top one now? Maybe what started from? No?
Why
You
am I
started from
using what?
the bearish wake,
What?
the bearish and the bullish.
Uh-huh.
So why are you using the bearish wake and the bullish wake?
The wick, you mean the line?
The line, no.
Yeah, yes,
Think ABR. To me, I
uh-huh.
think CBR is supposed to. You are supposed to draw it from maybe if it is bearish that you are talking about,
No,
then
no, 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 no.
bearish. Uh-huh.
The way the market is, no, we don't use single candles, say way a red, way a green, any of the analysis, no.
Okay.
Okay, we can have a series of green candles, but red candle will be part of it, and the market will still be bullish.
So always you check with the readings of the candles, you know. The
Yes, is
strategy, the reference,
the
what do you
most
call?
important thing is that though, okay, so let's see this. Um, though these candles are green, right?
Bullish, yeah.
Green bullish candles. Is the market still going down? Yes, the market is it there's this one green candle here. Here. Are you seeing this green candle?
Yeah, I'm seeing it.
Yes, there's this candle here. But still, the next candle became red, which means it has invalidated or disrupted this green candle. Okay. There was one green, one green, one green, one green, but the next candle was red and red. The green
Mhm.
but red, which means the red bearish candles or bearish the sellers are still in charge. Okay, so
Okay.
we take all as a group of candles that are giving us a bearish direction, though there are green candles in it.
Oh, okay.
Do you get my point?
Yeah.
Yes. So I'm using the wicks also because it is where the market got to before it started going up. For
Mhm.
example, here from top here, it came to stop here. You see, this
Mhm.
candle, big candle, ended here. But the next candle came down and touched here, and then went up again before the next candle closed, the next candle closed, the next candle closed. So this is the low,
Mhm.
and this is the high of this move. Okay, so we are not using single candles. Now, we are just using the whole move.
Okay.
You get the point? Yes.
Yeah.
Good. So, um, this current move we are seeing here is likely a pullback towards of the whole move that started from here, the bullish move to the top. This is like a pullback for it. Okay. But then
Mhm.
it is also giving us bearish structure, low, lower high, lower low, lower high. Is it going to continue going down? We don't know.
Mhm.
But if it continues going down,